Tonight, the world of global trade has been turned on its head. The United States finds itself suddenly and shockingly isolated. 7 of its most significant trading partners have simultaneously severed their primary trade agreements, a move that was once considered impossible. This is not a slow drift or a minor disagreement. It is a seismic event, a geopolitical earthquake with its epicenter right here in America. The news broke just hours ago, sending shockwaves through Wall Street, Washington, Main Streets across the country. The alliances that have defined the global economic order for decades appear to have fractured overnight, leaving the U.S. standing on one side of a deep and unexpected chasm. This coordinated action represents a dramatic and forceful rejection of recent American trade policy. For months, tensions have been simmering beneath the surface, fueled by... So, which nations took this historic step? The list is a roll call of America's closest economic allies: Canada, Mexico, Germany, France, Italy, Netherlands, Japan. Together, these 7 nations account for an immense portion of U.S. international trade. Their collective withdrawal is a devastating economic blow that will be felt immediately. The reasons are rooted in escalating trade disputes. The final straw was the American Economic Sovereignty Act. It imposed sweeping new tariffs. It demanded partner countries eliminate nearly all subsidies for key industries. The Allies saw this as a hostile ultimatum. While the move by all 7 nations is stunning, Canada's response has been unusually forceful and emotionally charged. As America's largest trading partner and closest ally, Ottawa feels betrayed. Prime Minister Justin Trudeau's address was firm and resolute. He announced a withdrawal from existing agreements and the immediate implementation of the Canadian Economic Resilience Act. The new law imposes dollar-for-dollar retaliatory tariffs on a huge list of American goods. It's a direct, powerful counter-punch meant to inflict maximum economic pain on the U.S. The Canadian government is going even further. It is fast-tracking new trade agreements with the other 6 coalition nations, building a new trade network that explicitly excludes the United States. The impact on American businesses is already being felt, and it is immediate and severe. Across the country, companies that rely on international supply chains are in crisis mode. Automakers in Michigan and Ohio are facing an abrupt halt in the flow of essential parts from Canada and Mexico, threatening to shut down assembly lines within days. This will not only impact the big car companies but also the thousands of smaller suppliers that depend on them. The cost of manufacturing is set to skyrocket as companies scramble to find new, more expensive sources for components that were once just a truck drive away. For American workers, the news is terrifying. The agriculture industry exports vast quantities of corn, soybeans, pork to these 7 nations, and is facing the closure of its largest markets. In Washington, defiance alarm. The White House issued a statement this evening, condemning the coordinated action as an economic betrayal by nations America has long supported. The president has vowed not to back down, stating that America will not be blackmailed, promising to double down on policies designed to favor American industry. This defiant stance suggests that there is little room for immediate de-escalation, signaling a prolonged and painful economic conflict ahead for everyone involved. However, within Congress, a different story is unfolding. There is a growing bipartisan chorus of concern. Lawmakers from agricultural and manufacturing states are being inundated with desperate calls from constituents. The Senate Majority Leader called for an emergency session, stating that we cannot stand by while our economy is driven off a cliff.
Across the border in Canada, the tone is one of grim determination. "It is with a heavy heart that we take these steps," he said, "but we will not sacrifice our sovereignty or the livelihoods of our people at the altar of American protectionism."
What we are witnessing is more than just a trade dispute. It is the potential redrawing of the entire global economic map. The post-World War II order, built with the United States as its central anchor, is now fundamentally broken. That system was based on a set of shared rules and institutions like the World Trade Organization. By acting unilaterally, the United States pushed its allies to create a parallel system that no longer revolves around Washington. This is a monumental shift with consequences that will last for generations. The coalition has the collective economic might, population, and technological prowess to rival the United States. They are building a self-sufficient trade ecosystem that prioritizes commerce among its members. This could lead to 2 dominant and competing global trade spheres, one centered on the United States and its remaining allies, the other centered on a European Asia-Pacific coalition. Such a division would make global business more complex, more expensive, far less efficient. This fracture could have profound geopolitical consequences. Economic alliances often underpin military and diplomatic partnerships. As the U.S. alienates its closest economic partners, it risks weakening its strategic alliances. In the immediate future, Americans should brace for economic disruption. The first signs will appear on store shelves in the stock market. Expect significant market volatility as investors react to immense uncertainty. Layoff announcements are likely in manufacturing and agriculture in the coming weeks. The White House has promised support for affected industries, but the scale may overwhelm relief efforts. The first critical challenge is managing domestic economic fallout and providing a safety net for millions of workers and businesses. The next move belongs to Washington. Defiance and escalation will likely lead to a deep, painful recession. The alternative is a return to diplomacy. That would require a significant reversal of policy and re-engaging with the World Trade Organization and other international forums. Pressure will come from Congress and American business leaders. The key question: will the administration change course to avert catastrophe? The seven-nation coalition must maintain unity. The U.S. will likely try to break their ranks with selective deals, a classic divide and conquer. If they hold firm, they gain leverage to demand a fundamental reset with the U.S. Their success or failure will determine if this bloc is permanent or a temporary protest. The world is at a fork in the road, one path, deeper fragmentation and rising protectionism. The other path, a renegotiated global consensus, possibly with a less dominant but still crucial U.S. role. The choices in the coming weeks will define the next decade. The world is watching.